Good morning, everybody. Hey, glad to see you out there. Thanks for tuning in as we get ready to talk about what's happening in the marketplace. We did get signature on phase one of the China deal. We'll talk about that a little bit, and I hope you'll stay with us during the whole, I don't know, 10 minutes or so that Dave and I will chat. Next week will be kind of interesting because Dave's on vacation, so I'll have it all by myself. So, hey, stay tuned. If you are 5 years out from retirement or already retired, I can't emphasize enough how important it is to know how much risk you have in your current portfolio. It's worth a second look to make sure you don't have too much risk. To do that, all you have to do is give us a call, 863-382-0037. Let us schedule your financial x-ray your portfolio to determine how much risk you really have. Hey, Dave will be with us here in just a moment.
Lady's pushing 60. I wouldn't mind a bit. 8:40 here. It is 20 before 9. Time to check in on your money and see what's happening to your IRA and 401k. And we got government data dump, and we got reports out of the companies, and all of a sudden we got a busy week going. Let's head downtown and get to it, to the offices of Statler Financial Services in downtown Sebring. Phillip Statler's on the line. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today as we, one more day left in this week. And if you think about yesterday, halfway through the first month of this decade.
You had to remind me of that.
Of course, man.
Time flies when you're having fun. And they had fun yesterday. I didn't check, but I'm pretty sure we had 3 record closes yesterday, didn't we?
I do believe that is correct.
Yeah, Dow was up 90.5. That was 1/3% up. We're now solidly back over 29,000. NASDAQ up 7.3. Standard & Poor's up 6.14, which gets us up close to 3,300 in the Standard & Poor's and well over 9,200 on the NASDAQ. I mean, still nosebleed territory out there for all of the signs that we're going to slow down eventually. Boy, it still looks like the bulls are winning the battle, doesn't it?
Yeah, it really does. It's like, okay, when's it going to happen? Well, who knows? Right now, everything seems to be coming up roses.
Yeah, and most of the analysts are saying they don't see anything on the horizon for at least the near term, but we all see indications that somewhere toward the end of the year, there's the possibility of things slowing down to the point of being worried. Government data dump, jobless claims don't show any softness in the employment market. As a matter of fact, it was a pleasant surprise, 204,000 first-time jobless claims. And I've always said when you get down that low, 204, 210, no big deal. But the expectations were for an increase, and we got a decrease, and that is a big deal.
That is a big deal. And depending upon which economist you follow and whose report you look at, the expectation for new jobless claims was somewhere between 216,000 and 221,000. And we actually came in at 204. So it was a pleasant surprise across the board.
Oh, yeah. I mean, but those two expectation numbers were both an increase over the prior week. I'm going to assume some of that was the expectation of seasonal holiday employment being laid off. It looks to me, at least so far, that the shifting and winnowing is turning into a net gain in employment.
Yeah, it is. And so that's it's going to be interesting to see how that kind of follows through. I guess we're getting a little bit of a heat up. The trade deal got passed or at least got signed off on yesterday. That was a big deal, in terms of the first phase of the China-U.S. trade deal.
And that made everybody happy, just for peace in the valley. Even if you look at the deal itself and say this ain't as pretty as we wish it would be, just not having that war of words growing across the pond is good news on its face, isn't it?
It really is, knowing that we still have another phase to go, which won't come until after the election. And that one's going to have some ups and downs also.
Oh, yeah, we'll have another series of we're going to whack them with tariffs, no, we're not, and all the things we've gone through for the last year, we're going to do it all again once the election's over, right?
That's exactly right.
Ain't we cynics on life? The other bit of data that came out today was retail sales for December. I had an analyst saying it was a bit of a disappointment. Yours was saying right on line, though, 0.3% increase in retail sales, and one should knock electives like gas and cars out of it. a 0.5% increase during December. We kind of had our expectations lowered a little after we had a tad softer holiday sales period than expected.
Well, that's true, but you're right. Those numbers came in line with at least what my economist that we follow. That was right where they wanted to be, and so no surprise there. Maybe some of Market Watch's guys wanted something higher than that, but the economists that I follow, that was really in line with what they expected.
And I tend to trust your economists more than I do the Market Watch people. I've always nicknamed them Marxist Watch because a little on the strange side sometimes politically. The other thing that comes out just for this, it's almost red herring, but it's good news, so we're going to pass it along. Philadelphia Federal Reserve puts out an index just like the Empire State one we were talking about yesterday. And it was a big change upward. Again, what goes into the calculation and how they do the index, we're really not clear on. But bottom line is from November to December, it goes from 2.4 to 17.4. And by any measurement, whatever they go into it, upward movement that big has got to be good news in general.
I would agree. I mean, that kind of huge increase, it's, I don't know, you're right. I don't know how they calculate or what they do, but definitely it has to be good, that big of an increase, right?
To kind of where I'm at in the process. Don't know what it means, but I know it's good. All of the Federal Reserve districts do their own calculations and their own indexes, and there is no standard. So when you see a number, you look at it and say, is it going up? It's good. If it's going down, it's bad, and you pretty much let it sit at that.
Yeah.
Earnings season underway, financials. We still got a few that folks have heard of. I heard Morgan Stanley had a good quarter last quarter.
They did. They had a very good quarter. They beat substantially by about 31 cents a share, better than expected. Now, 10 cents of that was a discrete tax benefit that they took advantage of, but still it fell to their bottom line, which was a good thing for them. Revenue was well above what the street had forecasted. They said firm-wide revenue exceeded $10 billion for the fourth consecutive quarter. So a lot of good things happening there at Morgan Stanley when it comes to the company-wide deal, and they're up a little over 5 3/4% this morning. Actually, they'll open at a new 52-week high this morning, Dave.
Well, so far, I'm kind of getting a picture of the financials that there was some iffiness on the consumer side, but as far as investment banking, we had a pretty good quarter for financials, didn't we?
It definitely is looking that way for sure. You know, when we look at what the banks are doing versus the investment guys are doing, you know, they seem to be going in the same direction for the most part. You're going to get a little red herring here or there that doesn't live up to the expectations, but right now it's sure looking like everybody's in the same boat.
Absolutely. Just a little bit more of a mixed bag on the consumer banking side, but by and large, if you use financials as being a canary in the coal mine, we're getting a relatively good look ahead toward earnings season. What else have you got for household names that are reporting their fourth quarter?
So I have Alcoa, which used to be the number one first guys to report out of the chute, but not anymore. Yeah. And they lost 31 cents a share, which was more than expected. They were expected to only lose 22 cents a share. So that was not good news for Alcoa. They're down 2% this morning before the market opens up. On the other side, we have this may not be a familiar name, but what they do is PPG Industries, which they're a paint manufacturer. They manufacture paint. They missed by 3 cents a share. Revenue also came in slightly below what the street had forecasted, noting they've seen some weak conditions when it comes to the industrial markets. And they're trading down 3.7% today.
That's one of the ones I see on my big loser list. I also think they're a big plate glass manufacturer, aren't they?
You know, I'm not sure. I think that's another set of initials.
Now they're kind of tanking this morning, one way or the other.
Yeah. The other one I have, the last one I have, is Taiwan Semiconductor. I think they're one of the largest chip makers in the world, and so they've raised their capital spending. I don't have the exact details, but I know that they had a 45% increase in revenue compared to a year ago. Strong demand when it comes to their 5G smartphones, and so they're well, my computer just went. Sorry, I had the quote, but it disappeared. So
they had a good right?
They had a good quarter. They were up when I looked at it last time. So
All righty.
good things there.
Sounds good. Resetting the table for the morning yesterday was a green day on Wall Street. Not one of the ones that's scary big. That means something's got to fall the next day either. 90 points up on the Dow, 7.5 on the Nasdaq, 6.25 on the S&P. All just good, solid gains. And like I said, not scary big. Got your futures up, or you want me to give them this morning?
Nope,
45 minutes.
I have them. They keep falling off, but I brought them back up. So
All
right
right.
now we've got everything up 1/3% or better. The Dow's up 86. The S&P 500 is up almost 11 points. The Nasdaq's up 37. So good things happening as we look at the futures today. We've got gold basically flat, silver's flat. We've got crude oil back up about 0.5% to 58.06 a barrel right now.
All righty. Overseas markets, Asia generally happy with our progress yesterday. All of those markets around the Pacific Rim closed up. Europe's having an off day. Germany's off by a tinge. Great Britain is down by over 1/3% halfway through their day. It's either Brexit or worry about Harry and Meghan, Philip. Which one do you think is probably affecting Great Britain this morning?
I think they're probably looking at Brexit a little bit more than they are the prince.
Oh, okay. Just making sure that I still have my perspective right. Somebody needs stability and need advice as to how to keep your retirement account in green ink instead of red. That takes an advisor with no vested interests. That's you. How do I find you to make an appointment?
Devin, give us a call for our financial x-ray review of their current portfolio, 863-382-0037. They can catch us online at statlerfinancial.com and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730. If they can't catch it on the radio, they can stream it live at those websites.
All right. And back here tomorrow morning where we will not talk about Harry and Meghan again, right?
Absolutely not. We got better things to talk about.
Absolutely. Thank you, sir. We'll see you tomorrow. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Passengers.
Folks, again, I want to thank you for joining us today. Look, if you are concerned about these markets and the highs they keep reaching, and you're not sure how much risk you have in your portfolio, it's time that you sit down and get a financial x-ray review. Call us right now to schedule yours, 863-382-0037. Have a great day. I look forward to speaking with you again tomorrow.